All right, good afternoon. And to my surprise, for 2 days, Fuel Cell Energy has been rocking. Welcome to the channel, Chuck for Options. All right, today we're going to take a look in the portfolio at Fuel Cell. Man, it is rocking. Energy Incorporated develops environmentally responsible distributed baseload power solutions through proprietary molten carbonate fuel cell technology. Wow. I will not act like I know what any of that means. And it seems pretty cool. Some disruptive, growing technology, in my opinion. They don't have a dividend as of now. So, like the company's so small, they're growing. One thing that is contributing to their growth is definitely their earnings. You can see a big increase over here. I'm going to go to some more screens to show you that. This is some history of some of the orders that I've been doing recently, but I actually want to take a deep dive into how I actually got involved with these guys. Alright, it was actually around here. It was by mistake. I did some research. So I call this going into the rabbit hole. People ask me all the time, well, how did you get into this stock? How did you get into that stock? All right. So around election time, I want to go towards, green energy or clean energy and more green. And I wanted to get them at a certain price. And I was okay if I didn't get them. But, because remember, always put in like your limit buy if you can, so you can, buy them. And there wasn't too much volume around these contracts, so I got them so cheap right here. All right, limit buy. I have 20 of them. I got them at $32 each. Total $640. This was October 7th. All right. The time in force was just one day, and it filled. They both filled like around the same time. I kind of planned it like that, but I really just wanted to get it at the cheaper price. That's why I have more down there and just, 10 up there. So time progresses, and man, those things go up. They actually go up to like 50, like 55 a contract. And I was like, wow, I didn't know what to really, how far this thing was going to rock. So I was actually late to the table. So I forgot which group I start selling, but I got rid of 10 of them, as you can see, for 44. And then boom, they start rocking again. This was October 8th, so all the same day. I got rid of 5 more. Okay, you see? And then okay, no, but this is a buy. So I figured, I better get back in there and see what I can do. So I bought 3 more. Let's take a look at this one. At 26 cents. But remember, it's 26 cents a share, but it's 100 shares a contract. Alright, and that's 3 contracts, so that's the math. Alright, and then I bought 1. I said, just let me buy 1 so I can track it. Because I wanted to track it a certain way. Alright, then you're going up. And over here, I bought 7 more for 56. I didn't do too bad with them. I got rid of these guys. 15 contracts at 35 a pop. 525. So I just went in, because you're going to see the companies go up and down throughout the months, throughout the weeks. And around this time, there was like a lot of volatility with this, and volatility is good because that's how you get the up and down movements, and that's how you're able to buy a contract or buy a lot of contracts for a low price and then sell it for a high price, and then go back in and maybe buy them back for a low price or a lower price, and then when it spikes up again, you can sell it again. If you don't have a day trading account, that's going to take you a total of like a day to do a trade, or you can use one of your day trades. You have 3 every 5 trading days, so then you can execute a trade. Past 3, you're going to get a PDT. You don't want to get a PDT. All right, I sold one here for 41 bucks. Moving up, sold 7 of them for 25. So, okay, so I was probably cutting losses right here because it was getting kind of bare. All right, last month was rough. It was very rough. All right, so I bought 4 more. Market buy. So now it started rocking. So I bought the one share at 244 for a reason. I told you because I wanted to use that as a benchmark. So now I use that benchmark to buy. I didn't go too far out, and I didn't know why I didn't rock out, but I didn't rock. All right, right here. This is a sell. This is a put. Remember, I told you about how to make money off the market by selling puts. A $3 put. I received right here $48. Alright, let's see what happened with that one. So this was an 1120. An 1120 put. I sold some of them here. Boom, boom. Sell, 2 there. This is good right here. You see 2 for 110. 1 for 160. Now November 12th, 13. Now look at today's date. Everything is hindsight. Be happy with the profit that you make. That's a big, that's a big thing that the stock market is going to teach you. Be happy with the profit that you make. If you see that it's working, well, keep working it. Until then, just be happy with the profit that you make. All right, because you're going to see how everything is just exploding. All right, so I sold some of them here the other day for 30, one for 60. Now, recently, total. When you click on your stock, your company, you're going to go to the actual front page of the company and everything that has to do with you involving with the company. So they're telling me here that I have shares with the company. Boom. This is how much of my portfolio this consists of. I have 3 contracts out right now so here go to 3. Boom, boom, boom. All right, this is actually heartbreaking, right? This is very heartbreaking. Remember that one thing I said. So first let's go to the collateral. Okay, I was selling some puts. This is cash collateral. That means that I had to put this money up. This is cash that I had to put up. When you're on the put side, remember you're putting up cash. All right, so I'm saying that by 11:20, I knew Fcel was going to pop. Okay, of course you don't know when. These are just projections. No one knows when. If they tell you, they know when. They're lying. It's just time. You have to give yourself time for it to actually happen. So that's just what it is. Just time. So on here, I estimated that Fcel was going to be above $3 at the end of 11:20. All right, and I received $48. You see the average credit per share, and I didn't give them anything. I put up the $300 collateral, and that is what that collateral is. Can you see it here? No, you can't see it here. But there's collateral in this contract. And remember, when you receive in your account. All right, so what I wanted to do was I received on this one, since the contract was further out, I received a little bit more premium. Now, I don't know if that $12 was worth that extra, what's that, like 2 weeks, 3 weeks to put out? But it wasn't, but it's okay. I can buy it back, okay? And I can still receive, the differences. So it's still going to be about $42. Oh, there we go, right there. Well, at least it's not some math, kind of right. So this contract again. This is a sell to open type limit sell to open. That's what the puts are on that side of the, I guess, tracks. Okay. Um, so that's the $60. So that's with this uh, particular put sell. Now here's the heartbreaker. Okay, because I had quite a few of these. I had quite a few of these the other day. Okay, here they go right here. Boom. I had 4 of them. Ah! So this is what happens, okay? Uh, you start selling because you're okay with the profit, and you're okay with the profit. What did I do? November 11th, I wanted to actually like learn what exercising is, okay? Because you're always learning in this game. No one knows everything. People have a better grasp, yes, but I just wanted to really just flex my learning, skill and curve. So I tested myself, and okay, so it did what it was supposed to do. Okay, so buying a call is a very diverse way to enter different positions. Okay, this time around I used it as a discount. So they just took the profit that I had within these 4 contracts. I took one. So this is just one of the 4, okay? One here, here's 2 here, and then the last one is here. Okay, that thing is still riding. Alright? I paid $54. Remember? I paid I paid $54 for one contract times 4, 216. Okay? I paid $54, and this is how much is up right now. So this is why I'm kind of mad. But it's kind of disguised, okay? Because two things. The first thing, I exercise a call action right here. This is what it is. Exercising a $2 call. Okay, so I bought this at $2. It was probably in the money, a little bit more expensive, but I was okay with that. And November 11th, it went well above some profit, so I exercised it, and it was telling me about the intrinsic value and extrinsic value that I had left in the contract. But I absorbed those shares at a cheaper price because they were at $2. So the profit that I took from the contract, I put towards the discount. So I was able to buy those shares at $2. All right, so let me see. So I'm going to go back and show you where I loaded up on those shares. You're going to see me only buy 100 shares. 200 shares. Boom. 200 shares. So I have 200 shares. I bought 200 shares at 253. 200. I exercised 100. And now I have 301 shares with the one that I market bought. So that's the math of why I have 300 shares. Okay, here they go. So this is 100 from here. So I still have that profit, but here, I was getting kind of nervous. I was getting really nervous, as you can see. So, I sold 2 of those. Oh, for more profit. Okay, so I still double. Okay, so it was all all in all a good trade, but like I said before, don't be too upset with like your dubs. Although I still have one riding right now for 320 profit, so I can sell it right now for at least 320. As you can see over here, I have one contract. Here's the limit price for it. So they're gonna, try and put you in between to try and hurry up and sell it. If you want to sell something quickly, of course you want to put it the lower price. If you want to get your price for it a higher price, it may take a little bit longer. The market could go up and snag it for you, and then boom, you can sell it for 340, 350. and get away with it, but you're gonna probably sell it for 320. But I don't think I really want to get away with it. I don't know. I have to make some decisions soon, so that's going to be in. Uh, but also look at the expiration time. I have so much time left, so much time for those 4 contracts. So that's the one thing that's kind of kicking me in the ass because I still have technically two because I have the shares because that's what options are. And that's why you have to exercise it to receive the shares. The options, you don't actually own the shares in the contract. You know, so you have a lot of wiggle room. It's options. You have exactly that. That's chuck for options. This price is coming down on. Okay, no, just on the $2 call. So the underlying price is probably dropped a little bit, but look at that, 22%. Let's go. Let's go. Oh, so we're already here. All right, so welcome to Fcel. I hope you took part in it before all of this good stuff. There's going to be another buying opportunity soon to get back into it. So I would recommend definitely, taking the chance to look at it and, happy trading. Thank you for, joining in today. I'm going to just try and get as much info out there with the different companies that I'm involved in, and some go to spike up. I'm going to give you more tutorials like this to some other things in my portfolio. So keep an eye out for them. Like, share, subscribe, and if you have any questions, please ask them down below. And have a good day. Thank you.